Sandeep Tandon, founder and CIO of Quant Mutual Fund. Sandeep, thank you so much for joining us. Your first take.
Thanks, Malashmi. See, I tell you, my personal view is that the market has become much more mature now, and the relevance of budgets and this interim budget has diluted significantly the way it happens globally, because you keep on getting so much data points on regular basis, policy announcements. So relevance as a budget, as a phenomena which used to seen in last many years, has reduced, which is a good step. But overall, I think it's despite election year and a lot of people were expecting a lot of popular stuff, I think it's a very, very mature budget and focus on fiscal deficit aspect to 5.1. The only disappointed, I will saying, the market was expecting much higher capex. Okay, the spending aspect has reduced considerably as compared to what we have seen. We're talking about a growth of 11% versus 30% what we have seen in last 33 years average. That's the only disappointment which market has, more from a capex point of view. Otherwise, broadly, reasonably good budget.
Yeah, Sandeep, I take your point that the expectation, there were outlier expectations of a 20% rise in capex to about 12 lakh crore. At 11.5, I think 11.1 lakh crore, those people, I guess you will be in that group, would be disappointed, because that was the only thing that was working very well for India. Sandeep, is there any disappointment on the FMCG front? The expectation was there will be bigger transfers. The PM Kisan Samman Nidhi was expected to go up from 6,000 rupees per year to 8,000. That was a big buzz. And some people were hoping that that would be positive for rural facing stocks. You don't see that as a disappointment?
When it comes to expectation, obviously this expectation was there, but I don't think we should get disappointed up to that extent, because overall post-COVID, what a phenomena we have seen. We are seeing now overall rural demand is picking up post-COVID, and then the logistic challenges which we have seen, and courtesy inflation also. I think things are looking, we are more optimistic on the consumption as a cycle. I think from this quarter onward is coming back. So overall consumption theme anyway looks good. That's one of the reason we launched our consumption fund very recently. It's linking with the this thesis.
Are you moving away from industrials, Sandeep?
No, we are not moving away, because what our thinking is that easy phase, like I'm talking about, easy phase of market is over, easy phase of expectation which we got, that is largely over, but we remain very constructive from India perspective. I always say this decade belongs to India, this maybe half century belongs to India. So the manufacturing as a thesis which is building up, a new thesis which people never thought of, that India will emerge as a key player in the manufacturing side. I think that segment is evolving. Look at the smaller companies. Sorry, I have a viral, so my throat is...
No, we wish you well, but we're able to understand you very well, Sandeep. So no problem in coming.
SME point of views and the mid-sized company, we have never seen this sort of order book position. We have never seen this sort of excitement in the entrepreneurs, which we are seeing in last 6 months or 12 months. I think so that is a very constructive background which we have from a longer term perspective. Okay, and obviously which means that mid and small cycle has not peaked out as compared to a lot of people who are expecting that market is peaking out in this space. I think it's a new beginning. Maybe sector rotation, stock rotation will continue, but India looks amazingly good, and so it remains a very buy on dip sort of strategy for us.
Okay. Sandeep, I've not asked you about the sector of the moment, public sector banks. This huge rally that we have seen in the bond markets, yields have fallen from 7.18, I think overnight, now 7.07. An effective half a rate cut, so to speak, 11 basis point rate cut coming. Is that making you more attracted to any sector, public sector banks, banks in general, NBFCs, just anybody?
So obviously this is more constructive of the public sector bank versus private sector bank, and we as a house has been bullish for last 2-3 years in this space, so it remain very constructive from a longer term perspective also. But if you look at Lata, yields have peaked out globally, in somewhere in September, October of 2023, so it is on the declining side. But we have to keep in mind that from a very near term and medium term perspective, yields has potential to correct. So maybe we can expect maybe closer to 6.7, 6.75. That's what the yields which we expect maybe in a year's time. So it's a very constructive space for the private public sector banks.
Do you think NBFCs are more advantaged when the market yields fall? See, it's not a rate cut. So banks don't get the advantage of perhaps lower deposits. There is still such a scramble for deposits. There is nothing in the budget which eases the liquidity crisis in the interbank market. But with the market yields going down, do you think NBFCs are more likely to benefit at all?
So, sentiment point of view is yes, and they will be a beneficiary of that. But we have to, if I look at from the market perspective, I think this sector has been trading in the most admired territory for a while. So, from a market perspective, whether people will make money out of NBFC stocks looks very, very difficult versus private bank and versus even public sector banks.
That the finance minister talked about today, the EV segment, the green energy segment, and housing. Does any of that sound exciting to you at this point?
See, green energy as a thesis, we think is going to stay there for a longer term perspective. But the challenge from the market perspective is that you don't find many companies and some of the larger groups who are implementing this green energy thesis or the hydrogen, or if you talk about the renewable side also. It's a time consuming process. So one has to be slightly patient, It will take 6-7 years to really build something what Mr. Modi is talking about. So maybe 2028 till 2032, maybe we will see some meaningful numbers in this segment. Otherwise, right now, if I look at the stocks, obviously they looks very expensive, what is happening, but somebody has that vision, which we have. I think this is the area, it should be your core position, it should be a strategic position, or what I call a decadal view sort of thing. Some of the stock one should look into.
Okay.
Sandeep, but in all these categories, for example, green hydrogen EV itself, most of the stocks that you find are, blended stocks where some part of the business is getting disrupted, some part of it is, in expansionary stage. How do you navigate that? Would you ignore them and, go only for pure plays?
I think yes, I agree with you. That's the reason pure play also, whichever pure play is available, either they are very small or they are too expensive.
Exactly.
Okay. So as a house, we have taken a conscious call not to get into these smaller names and look for a larger thesis. Some of the conglomerate sort of companies who are implementing these larger projects from a longer term perspective. But again, I say they all also look slightly expensive right now. But if you have patience and vision for next 8-10 years perspective, I think these are the areas where you will get exponential returns.
2 or 3 sentences from the budget, and I just want to know if there is a stock market play on it. One is that they are going to increase rural houses by 20 million. That is 2 crore more rural houses in the next 5 years. Then solar rooftops are going to be extended to, I think, 1 crore houses. And that will mean free 300 units of power for these 1 crore. But importantly, rooftop solar. That's another independent announcement. Will you play these as stock related announcements? I mean, will you go for, say, cement because of rural housing finance companies? I don't know, HUDCO. Of course, it's rural, it's not urban housing. Anything, any of these, do they give you stock ideas?
Yeah. So frankly speaking, Lata, as I said, smaller names are anyway very expensive. So I will play with larger thesis like infra. If I talk about the construction companies, you want to talk about the cement companies, you want to talk about metals company, but pure play solar panel sort of thing are very limited names. So I will play a larger thesis as a fund house rather than playing for the smaller names, okay, which is hardly have any liquidity and they have rallied a lot.
Okay. Well, just one final question, Sandeep. There is also an announcement of this 40,000 bogies, which will be converted to Vande Bharat. BML or anyone a likely candidate here?
Yeah, definitely, Lata. Some of these names looks very interesting, but the only thing we have to see up to what extent this has been priced in. If you look at the runaway moves which we have seen in the railway stocks and the railway related companies, moves has been extraordinary. They have, multiplied in last maybe in 1.5 years or so, or multiple times return they have already given. So if somebody has that vision from that longer term perspective, yes, very good. But I will not like to react on instant basis because this announcement has come, because up to large extent it was on the expected lines and it has been factored up to large extent.
What is your prime hunting ground today?
So if you really look at nothing new has emerged out of this thesis.
Correct.
So same if you look at the from the government perspective and from a market perspective. So larger thesis, power energy thesis continue. PSU as a themes continue. PSU as a banks themes continue. Larger infra projects continue. So I don't think, Mahalakshmi, that anything new has emerged out of this budget. As I said, these budget or interim budgets have become, they have lost their relevance. So I think the traditional thesis which we are talking about in last many months, I think those themes will continue from a longer term perspective.
So can you recount that for us? Because in all of it, like we spoke, in many of these segments, I mean, budget is done and dusted. Now, from here on, where do we go? What is your main hunting ground? That's what I wanted to ask, because all these things that you mentioned, many of them, again, have priced in. And today's market is really a giveaway that a lot of good news is not really impressing markets.
So beginning of 2000, let's say from September 2021, we have been talking about that this decade belongs to value as a thesis. Okay? And the growth stock or the stocks which were in the admired territory, they have peaked out. This is a thesis I have been talking for a while. I think I would like to extend the same thesis that value as a thesis has potential. Then if you look at the value, where's the value? Obviously, large public sector bank, which are in public sector enterprises, which are in a unique situation, there's still deep value in some of these companies. So we obviously remain very constructive on the PSU as a thesis. Okay, I'm not talking about a smaller name, but larger conglomerates of the government. Those are the names which we like. Then if you look at other areas, the larger inference, obviously cement looks good to me. Even it has to be linked with the metals as a whole, both precious metals, both base metals and ferrous and non-ferrous, both space you look at. So metals looks very good, cements, metal, PSUs. And up to a certain extent, I will say, the construction companies, EPC companies, because ultimately leads to that. Maybe with some disappointment, which we have seen on the capex cycle, so maybe the capital goods stocks might peak out or they may stagnate from a medium to near term perspective, but long term perspective, they also looks very good. So I would like to remain focused on the energy, power energy as a theme, PSU as a theme, metals and cement as a theme. These are the larger themes which I would like to stick with that.
Summary of what investors and traders should watch out for. Sandeep Tandon, thank you very much indeed for joining us with your thoughts on the market and the budget.